We kicked off this shortened week with a welcome rebound across the bond market and mortgage rates. Now, we have seen over the two previous weeks, rates had moved out of this very predictable range we've been in for the last couple months. And that breakout was really in response to incoming economic data and comments from various Fed presidents that indicated another rate hike at the meeting coming up here on the 13th and 14th of this month. Now, this week we did have Fed presidents who spoke, preached patience. They talked about skipping another rate hike here in June to kind of see how the hikes and other restrictive monetary policy that's been put in place up to this point is working to slow the economy. Now, this week we did have a host of reports of the labor market on employment data. On Wednesday, we had the JOLTS report, the job opening and labor turnover survey. On Thursday, we had challenger layoffs, which is a measure of job cuts. And then on Friday, we had non-farm payroll. This is the biggest piece of employment data each month, at least the first Friday of each month. Now, payroll growth did come in way above forecast, 339,000 jobs compared to a forecasted 190. Unemployment ticked up 3.7% compared to last month's 3.4. Hourly earnings ticked down 0.1% year over year. And hours per week also came down as well. So we kind of had this tale of two cities where you have payroll growth showing a very strong labor market. Then you have unemployment, hourly earnings, and hours per week pointing to a labor market that is contracting. Now, the markets do tend to move more to payroll growth, say, than unemployment. So we did see rates tick up a little bit on Friday, but in comparison to the degree of improvements Tuesday through Thursday, it was fairly minimal, and we were able to close out the week in stronger territory than we opened. So definitely good to see, and definitely strong for our buyers who are out looking at homes right now. Definitely a strong housing market. You have any questions about these headlines, about these rates, or if you're curious how they impact your purchase power, definitely give me a call. This is Billy.Saylor, your mortgage professor, 571-330-5884. Enjoy the rest of your weekend.